All right, guys, this is another edge coaching class, the 2 PnF. We're going to go over what George has kind of looked at and liked over the last few weeks. As you kind of evolve as a trader, this never stop learning notion of any profession couldn't be more true with, just looking at the same thing a better way. And that's what being part of a group community does. So for guys live, it's obviously June 22nd, 2015. We got and kept a bid after last week's FOMC dovish comments. Greece, which late last week created some fear, has unwound, and now it's, hey, everything is good. There's still a chance that gets unwound and we start to go south pretty quickly. If there's another news story that Greece, doesn't like some of the details in the agreement, whatever. That's not set in stone right now. But that it did create some bullishness out of the weekend. S&Ps have kind of held on to some of that strength for the most part. But now, today we had a FOMC voter, Powell, talk about back-to-back rate hikes at the September-December meetings. If you weren't around the trading room for that, we mentioned that. It came out right around when the room opened at 8 Central. Created some near-term weakness. S&Ps then rallied that back. Couldn't make higher highs through the overnight session or yesterday's high, which was 22 even. So we've laid back down on yesterday's close about 4 or 5 times. I'd imagine this time they get a little eager to go lower and achieve some downside targets. But for now, we're going to focus on this class. George is going to contribute this week and show his screen, show his charts. Then he'll kick it back to me and I'll show my charts and add a little bit to his presentation on how you could see maybe consolidation high-low a little bit better. This is a micro view of the market. But I have to say, again and again, it doesn't mean you have to trade short-term. But you could set this up to execute a higher time frame you guys might like better. Or use this to predict a quick move up or down, which is going to help get in or out of an ancillary market. So you don't have to trade fast, trade short-term in order to understand this stuff. The 2 PnF, it's going to create a lot of bars. Go back and watch the coaching session that goes over the point and figure and talks on how a new bar is created if you don't know. So we're not going to cover that in this session. You should either already know that or there's classes in the past we've done documenting it, so you'll be set there. For right now, I'm going to kick it over to George to do and show his screens. George, you ready to show your screens?
Yeah.
All right, let's change the presenter. Take 1 second. Got it.
All right. This is what I've been, working with and just following it. I got these moving averages on here. They're kind of more like trend lines to me. I don't use the actual moving averages, but I can see if you're like in a uptrend or a downtrend, they tend to like go up. Like there was an uptrend, and then let me show you a downtrend. I was just in a team meeting. I hope some of the guys caught this. Gave them the trade scenario. No, not the edge meeting, like one of the team rooms.
Yeah, through 13 was the sell, no doubt. But go ahead.
Yeah, but you had to wait for confirmation, though, so you're kind of better off it hitting the low and trying to get it on the uptick a little bit, and then, or you saw the low and you have to live with the potential amount, a little bit of heat, all right? That's what I was trying to tell them. And then at least 11 quarter, 11 half downside. And it should happen fairly quick, which it has. So hopefully some guys profited off of it. But I mean, like this is really good. Okay, I like to leave it like scrunched up because it gives me more information, and just by the look of it, I can tell, we've been pretty much sideways, here, and there's sideways within the sideways too, which could always lead to something bigger. And I'm just giving you like different ways of viewing it. So right here, we had kind of like this triple bottom looking thing on the profile also, but what we had was a consolidation within here. And, given that the more times the market tests something, the higher the probability that it goes through it, this is pretty much a good scenario. But being able to identify, the consolidations or a meaningful one, I feel like this market is very helpful in, or not this market, this chart, and if it's trending or not. And I guess, these moving averages, if you use them as trend lines, can tell you if it's trending or not, because they're not. I mean, here it was trending, but then they came back down, so the market isn't really trending, right? But over here, the look that you got on the market when it was trending a lot higher, the prices were moving higher, and those were kind of like your trend lines. See, they were pointing up, and then when we got sideways, so did the moving averages, so you could use them as like trend lines. And then we started trending higher again here. They were going up. If I scroll back a little bit, we had a downtrend day here. Was trending higher. Then you got a trending lower market. If I open it up here, you can see really where the market got sideways. So these are all like various visuals that can help you. And then the way that they work is, they won't make a new bar until it goes up or down opposite 2 ticks. So what it can point out to you is like a quick transitional moment out of a consolidation, and you could cover a lot more data and kind of have a little bit longer term of a roadmap just using a simple bar chart. And the way that the chart gets plotted is the two PnF. And then I like to use it along with this, and then along with the delta chart and the profile and so on. But I feel like it's helpful to identify consolidations. Even if you're in an overall consolidation, which really we have been today, you'll still find many, small consolidations also, like here. And then you broke out to the upside. This was like 19 quarter, 1875. When you quickly ran through it, and because of order flow, we identified 16.5 as being an important thing. It broke through it, and it really hasn't looked back. Here's really another consolidation right there. You broke out of it, you started to come to it, you broke through it. You know what I mean? Like you have to vision all these consolidations. This was rejected, right? Kind of came out of this one to the downside. We traded a little bit through here, and then, this was kind of the slap in the face, that broke to the upside easily. And really the theory behind markets is they go from efficient to inefficient. So this kind of helps you see when they're efficient in our micro basis by going sideways and staying within a range, and then you can see when they become inefficient. Like here, we had one here, it was efficient for a while and then became inefficient. Every bull, for whatever reason, wanted to hit the exodus here, and you collected some shorts in here, which won. And then in here, we were pretty efficient till now that we got inefficient. So right now, the line in the sand really would be kind of in the middle of this, which is about 14. So if the market's like below that, you still got to swing a little bearish, and possibly hit on that 9 or 10, which comes from a single print from the Sunday overnight session. So it's kind of helps me stay in tune with what's going on at all times, and kind of all markets also, because I'm looking at all of them the same way. Like here's the NASDAQ. It's almost like kind of like watching the dome. I mean, it's not necessarily, you don't want to necessarily replace the dome, but with this, but it can enhance it because you're kind of watching, and then you got a little line to show you a little history of what just took place too. There's the Dow one, and here's the Russell, and they're all just 2 PnFs. Same with the crude oil, and I felt like this has been very helpful to me to stay in tune with the market. Just looking for the consolidations and see if it's happening at an important price at the time. We had a nice one here. This was a really good example of one. We identified the consolidation, and then the important price was this low, and we had an exit also right here. And it happened, kind of quick for you.
Hey, George?
Yeah.
I'm going to take the screen share and show a couple things comparing it to 4 PnF, unless there was something else you wanted to show. Was that pretty much yours?
Yeah, that's pretty much it. And then whenever, like a light goes off in my head, I'll bring it up, to people too in the Edge group rooms and possibly the room too. When I find it somehow how it when I notice like a nuance about the way that it plots out the prices. But so far, I mean, really identifying the consolidations and the breakout of the consolidations is been really, really valuable using this chart in conjunction with all their stuff.
All right, sounds good. Let me take the screen back, and I'm going to show my screen again. All right, what I built here, or you guys should be able to see it now, 4 PnF is on the right, all right, with my dark background. So that's a 4, and this is the 2 PnF. They're going to look a little different. One thing you want to be careful of is too much noise. You got to get used to a 4 and then step it down to a 2. I always thought the 4 showed better consolidation than the 6. And now after watching and listening and looking at the 2 because of George, I think the 2 could show better consolidation breakout potential than the 4. Don't get too spun around and trying to. What'll happen is you'll get tick sensitive, too tick sensitive, meaning you'll want to make heads or tails on every little bar or whatever. Let it set up and show you potential breakouts. So if you look at my gray cursor, that's vertical here. Whatever time period or bar I'm on the chart on the left, you'll see the one on the right move, correct? So I know like this looked like a swing high on the 2. If you go back over here, it was just on these swing highs on the 4. Now let me take this 4 and close it. Let me take this 2 and close it even more. There's going to be a lot more bars in the 2 than the 4. A lot more bars in the 4 than the 6, and all the way up the PnF scale. Consolidation on here, what George was showing on his white background chart was in here. It couldn't, at one point, could not get above that yellow rectangle or below this yellow rectangle, which happened to be yesterday's close, correct? So then when I come back and I say, we're going to at some point jam through these 13s, I could tell you, not being in the team room, not knowing exactly what George said, is let them creep through it a little bit, sell an uptick, and then realize that move. If you sell the 13s, it might hesitate a little bit and then go, given the context of the day. So if I open this up, here's what that little rotation looked like, where it went down, comes up, and then jams lower pretty quickly and lets out some sell stops. It only goes to 11.25. And George and I both had 11.25. I think IB extension low, and I had 11.25 for another reason. Stopped her on the to the tick, and has bounced 6 or 7 ticks, which is a nice move in the context of how today is gone. But going back to 2 PnF versus 4 PnF, you want to be able to see breakouts. Like I mentioned at the beginning of this session, it doesn't mean you're going to be a breakout trader all of a sudden, but it'll start to underscore predictable moments in your trading. There's nothing better than being right as quick as possible from making the opinion, creating the opinion, right? More people recognize when you're right quicker, and you get more credit for it, both in trading and real life. It reminds me of I manage my kid's baseball team. If I tell a kid, hey, move over to the left, it's coming to you down the line, and then the next pitch kid hits it down the line, I look like a champion. I just kind of guessed at that, but I look like I knew something, right? I just moved him over because the kid's a good hitter and he's probably going to pull the ball. That's it. Little probabilities. I didn't know anything more beyond that. And you're trying to stack that in trading. A little less guessing than that, but it's the same thing. What's the chance of this holding again and again and again? And maybe you see it a little cleaner on a 2 than on this 4 when you tighten it up. Now I really tighten up the left-hand side here, which is the 2 PnF, remember, right? And you're taking a lot less time to show maybe better consolidation. For instance, when I say less time, this looks like, wow, this is way back yesterday. Well, it's not. It's back 7 o'clock this morning in here. We opened up right in there. Where could you get cleaner breakouts? There's also a moment where when the market moves faster, a 2 PnF is even better because there's more of those breakout identifiable moments. The 2 is a much bigger and different look than the 6. It doesn't have a ton of difference to the 4 as much as obviously 2 to 6 is much different than 2 to 4. So for instance, I could draw a square around this consolidation, right? Lows are down here, highs are up here, here's the box. We broke out of the box downside to 11.25 in here. Well, on a 4 PnF, here's the box. Same box. and you draw it like that. Now, let's erase those illustrations. Let's change this periodicity. It's easy to do on a market delta. You right-click it, you go up here, and you hit 6, you hit OK, you hit OK, give it a second, and that's the 6 PnF. I don't look at 6s a lot. It's a little different to see that box because there's a lot less bars, but that's that box in there. If you take a 6 and go, the thing is with longer time, bigger numbers on a PnF, what happens is there's a lot of moves inside one bar that you're missing. And you're not like being able to read every word of the story or the chapter. Now, that's the risk with a high PnF number. The risk with too low a PnF number is if you try to read too much into it, it could become noisy. You're just looking for breakouts. George, if there's one thing that you like the most about the 2 PnF, what is it? If you had to answer it in 10 or 20 seconds.
Identify the consolidations, like
Cleaner.
top of the yeah.
The reason why consolidation highs and lows, the top of a move, the bottom of a move are important is because that's where people have an open position. Meaning short-term guys, when you're trying to analyze short-term traders, doesn't mean you have to be a short-term trader, but when trying to analyze short-term traders, there's nobody in the last half hour, let's say, that is short better than this price up here. Why? Because we haven't traded above that price in the last half hour. There's nobody long better than this price down here in the last whatever hour, let's say. Why? Because it hasn't gone below there. So if you know that there's nobody long from below this yellow line in the recent past, then you know that they're going to get pretty nervous as it gets closer to this level and below this level. Why? Because they're all losing money, especially the longs up in this area. But definitely the longs, even if they bought it really good, the best you could buy the market over the last 10 minutes, let's say. And we're testing that area. That's why it's important, because that's what starts to show you and allows you to understand that those longs are in trouble at or around that area. So being able, if a 2 might show it to you cleaner and a lot cleaner than a 6 is gonna. But don't read too deep into it. Just all you're trying to find out is better consolidation patterns than a 5-minute or a 2-minute or a 6 PnF or a Renko bar or range bar is going to show you. That's where people are opened. If they're in a trade, that's where they're in the trade from, between 13 and 15. Why? Because that's where we've been in the last 5 minutes, for instance. Not these last 5 minutes, but you know what I mean. Everybody who is long in here, in this consolidation, in this rectangular box I'm drawing, is probably long on average. Just take a simple in the middle. Some are long up here, some are long down in here, but let's just average it and say they're long from the middle. You know the SOBs are trying to sell this thing below the middle, right? You got all kinds of offers that are piling up in here, which is keeping the bottom or close to the bottom of consolidation resistance near term. So not only is it showing you the bottom and top of a consolidation, but it's giving you a sense of, near term support or resistance after it breaks out. It's not a coincidence that a market, and this is the way you got to follow it, finally breaks out of this bottom yellow line, comes back, it tests it, holds, and then retests the low of the move, which is right there. Today is not a great day either for breakouts because of how slow the tempo has been. And still you could see the consolidation. So let's go and look. I haven't looked back. I'm just going to look with you. Let's go back to last Friday, George, right? What was Friday? The 19th? I think so. What the heck's today? 23rd, 22nd, 1, 0. Yeah, 19th. So June 19th was Friday. We had a couple big moves based on Greece, I think Thursday or Friday of last week. And not knowing exactly when that was. Was that Thursday or Friday we had that big break? I think it was Friday.
The move back lower or higher?
Yeah, no, lower. Remember the
Friday.
DAX? Yeah, it was Friday. Okay, so
Friday.
this is 2 PnF. If I were talking through this, there's a little bit of a delay by the time you guys see something. Let me open this up. There we go. All right, so if I was talking, you guys hear my voice pretty real time, but you don't see what I'm drawing. But if I'm walking through with my cursor like that, and I'm telling a story as the market's trading, I could say, oh, the market comes down and now it's just walking back and forth, not really knowing what to do. And it's starting to set the high consolidation up here, the low consolidation down here. Also, what's important to understand is it's going to look like 2 attempts on a 4 PnF. It might be the 3rd or 4th attempt on a 2 PnF. So it's going to probably take more rotations to get through the top of consolidation or the bottom because there's got more bars forming. Just keep that in mind. So the market's just walking, trying to find direction. Anytime it's consolidating, it's because there's not enough people committed to push their longs up, push their shorts down, or maybe even open in an open position to get nervous enough to exit it. That's where consolidation comes from. It's a timeout that happens in athletic events, or it's when the game slows down. It's when the football team comes to the line of scrimmage and is reading the defense. It's taking a little bit longer to snap the ball because they're thinking, they're going through their cadence, they're through their progression. In trading, the whole market's going through its progression. Okay, what do we want to do? We don't have enough trap shorts yet to go up, longs to go down, enough bulls to buy it, enough bears to sell it. So it's a pause. Still pausing as I'm pulling this in. Now you start to see it take out the bottom of the range. It starts to hold the bottom of the previous range. What do I mean by that? Well, if this is the range that you drew in here, right? It finally gets through it and holds it. Keeps the bears holding the leash. It's staying below where most of the longs from the previous consolidation would be stuck from. You keep the long stuck, bears still have the leash. I'm not sure what time that was. Were you sure? Did you know what time that was?
No. I think it was in the latter part of the day, though.
It was after 10:30. It wasn't this late, though. Let me take a look at another. Aha! I think this was it. This is a good move. From 19 to 10 in less than a half hour. Okay? And it's midday. This was probably Greece related in here. Why does it matter? Look at these consolidations. This is where your eyes have to get fixated when I'm going to draw. This is a box you could draw around. It breaks out there. It comes back there. Stops near-term resistance. Another box. It breaks out in there, goes down. Where does it come back to and stop a couple times? Bottom of resistance or bottom of consolidation, where I'm redrawing this yellow line. What happens when it jumps back in there? It gets bullish, doesn't it? It holds the bottom of consolidation a couple times, if you think about it. What does that mean? It holds the top of consolidation, I meant to say. Follow me here. This is another box. You got to draw these boxes in your head. Look as it holds as support. Draw this box. Oh, shoot. Draw this box. Look as it holds as support. Even in here for a rotation. Gets through it. Holds as resistance. Draw this box. Breaks out. Comes back. Kind of comes back and holds as resistance. Definitely set the tone, creating a bias for you. If it doesn't get you short there, it'll help you create and polish your predictive skills as to what the next side, as to what the next right side of the market is. I'm just going through this with you guys as if I'm doing my homework on it. Here's a box. Market breaks out in there. Comes back and holds as support. I mean, you can go over and over the opportunities that you see from identifying cleaner consolidation. Here's a box. Where does it come down to? Right in there. Holds it as support. The reason why this is powerful is because it creates closer to real-time analysis what your competition stinks at. Plus the community that's being created among Edge members, it allows people to give a sense or remind them of, hey, there could be a breakout above or below. Here's another example. Consolidation box right in there. Breaks out in there, comes back down, stops, continues. Stop started. Just another way to look at it. I mean, here's another box. I don't know where the bottom of consolidation is. I won't pull it up. As soon as it breaks out, it comes back, holds it, not exactly to the tick, but holds it, jumps back up. You could call them breakout boxes. Be able to draw one. If you don't have an illustrator, obviously, be able to draw one and help determine where near-term support resistance is going to be. But you're going to have to want a breakout. And no, it's not. So Drew is asking, is this how I figure out my levels? No. If it was, I'd tell you. I would. I'd tell him. I'd type it back to him and said, you got it. Great way to create better levels than HVNs, LVNs, and all the rest. Here's a question by We. The bid offer tool is built in market delta charts. So I think it's in preferences, right, George? Or no?
Yeah.
It is? So right-click on the backdrop, go to preferences, go to options, and then you check this bid ask tool. Right-click, preferences, options, make sure you're on options, bid ask tool. That's just going to give you the best bid, best offer. And the dome obviously gives you 5 to 10 of the best bids, best offers. And no, it's just going to give you the top best bid, best offer. So now we're back to real time. Should this 13 hold as resistance? It already has. It already has. I would have liked to have been short already, either as it went through in that circle or on a pullback to that circle, and paid for the trade, at least being out of most for a profit. If I still were to have it, I would be a little less inclined to want to sell it now, because it already worked a couple, 3 times. But if it does rotate back down, those who have been buying the 11 quarters are going to probably get stuck, and that's where you'll see your next breakout. You're starting to draw this box, a breakout box around there. Remember, though, it's midday and it's been quiet even early in the day, so don't expect a ton. Let's take a look at what the 4 PnF look like on this breakout. It's almost a little less, it's like a little bit more, I don't want to use the word clutter, but you could see the real amount of attempts that it's had trying to bang through 13 and the 2, where here it's just the second rotation. Still sellable, but just know that it's had a couple opportunities to work, including the first momentum push lower. Do you get your face ripped off? Nobody's asking this. Do you get your face ripped off if you sell it here and you're wrong? I don't think so, no. I'd be surprised if you took a 4 to 5 tick loser being wrong in here. It's just time of day. It's going to take a while to seep back lower. And then 11 quarter, which has been good. And I don't have it as support because of these swing lows either. But just a small line in the sand for 11 quarter. And I believe it was the IB extended low for George, right? The 150 IB low, George?
Yeah, 11 quarter, yeah.
11 quarters, held to the tick. They hit a lot. This is the 6. Yeah, I was wondering why it looked so. This isn't the 4, it's the 6. Didn't seem right that it would only have 2 rotations. It seemed like the 2 PnF had a few rotations at 13, and the 4 only had 2, but it was the 6 that only had 2. So good call, whoever seen that. Pat, if I had a gift, I'd give it to you. Here's the box on a 4 PnF. We broke out in there. We rotated once. Twice, pretty much this time, on the 4 as well. And you could almost redraw a consolidation box beginning to form in here for a breakout through 11 quarter or through 1350. And that's how you talk yourself through the market. So if you wanted to buy it, if you were bullish at 11 quarter, you could buy 11 quarters just based blindly on, let me take a shot and risk 4 ticks. Starts going, this is before, right, when it went down to the target. You blindly do it, know where you're going to get out before you get in. You get a 2-point rally, you got to take some profits. Now you sit with your feet up, and you know you're going to get an additional drive higher if it continues to knock and scrape against the ceiling at 13.5 on another rotation or 2. That should drag you into the middle of this rotation. Why in the middle of this consolidation? Remember what I had said in a previous edge class about certain consolidation being good, near-term support resistance, or where markets want to go. Why in the middle of it? Because in the middle of it is where you get the average longs, in this case, stuck long. this is a good question. Do I use, or does anyone use, the 2 PnF for gauging market correlation? No, I don't. Personally, I don't think it's a bad idea to look at it to gauge it as near term. I use the DOME, which is as real time as you could get, and the 2 PnF would be right behind that.
I have been. I mean, I use the domes also, but I like them. Some of these the currencies too. When you identify the range, because the currencies run, pretty quick. I haven't traded it too much using it, but you can definitely identify the quick consolidations that happen in the currencies and the crude oil and all, just using the 2 PnF chart and the knowledge of knowing that markets they go from busy to timeouts. The timeouts, they're kind of throwing paper wads at each other to see who falls down first. It's kind of what happens.
Hey, look at the, oh shoot, stop sharing the screen. I just changed this to a NASDAQ chart on the right. Now, you got to line up your PNFs. A 2 PNF is probably too small for a NASDAQ. A 4 in the NASDAQ is like a 2 in the ES. So here, if you want to use them as a correlation, you can see this big drop they just had in the NASDAQ, and you can see the ES didn't really go with it. What does that tell you? That's going to give me less bearish in the ES. Just real near-term analysis. Look at this big drop you just had in the NASDAQ as we were talking, from 35.5 to 30.5. That's a 5-point sell-off. 5-point sell-off is pretty decent for this time of day in the NASDAQ. And yet the ES didn't drag lower. It's close to maybe taking out the top of this 13.5. Buy stops above 13.5. Does that get me long? No. It's not going to get me long necessarily. Just going to get my ears up and say, you probably got some PO'd shorts in the ES. Let's see if they're PO'd enough to melt it up through 13.50.
For some of the people that look to, position trade it a little bit more too, you really have defined areas that you risk to, I think you can still be bearish overall as long as we stay below 14, because 14 is kind of the middle of the previous consolidation. And then actually 14 quarter ends up being the POC. But not because it's the POC of the day, which is usually a magnet anyway, but just using the previous consolidation on the 2 PnF, around, you really wouldn't get too bullish until it went over that. If you're doing some bottom picking or whatever, you really should have scaled out, and then, if you hoped to have bought the bottom of the day, you definitely needed to see it go above 14, just from, it could turn bullish. All right, we don't know if it's gonna or not, but if you slice through 14 even, you could really grow some horns, But if it comes up against it, which it kind of has, and nothing really happens, you can kind of maintain your bearish bias.
Well, here's what I want to add to when you're looking at one breaks and the other one doesn't. If the other one that broke, like the NASDAQ, were to pop, that's when you'd get a pop in the ES. If the one that broke continues to break, you kind of not be playing that divergence, because what's weak is still weak. You could see the NASDAQ, if you follow my cursor, come up a little bit and then resells off. So you just have to make sure you're not timing it too early, because the ES could always fall out of bed and follow. You just got to watch it and see it develop. Now it's midday and everything is slower than slow, and it was slow this morning, but you're still getting some downside in the NASDAQ. But even in the NASDAQ, in any market, you guys trade, what's the box in the NASDAQ? And you could see it right in here. Like, I don't know if 4 PnF is as good at a clean look as the 2 in the S&P, but I mean, if you just look at this being the box in here, there's probably going to be some resistance around 33 in the NASDAQ. It's another way to look at the same thing, whether it's correlations, near-term support resistance. What we continue to do in this community is real-time analysis, keep getting more and more confident as to, I knew why that happened. Not, why did that happen? I knew why it happened. I predicted it. And I don't feel like it's a good guess. It's less random than it ever was. It's just dead right now. You can analyze till you're blue in the face and there's no opportunity. Other than you might get to get a little jumpity around 13.50, 14 even, maybe to the upside. I'm going to stop the recording for this session and then go into some questions. So this will be the end of this June 23rd session, and then we'll roll into a Q&A period. You know what? I didn't stop recording. Now I'm going to stop recording. You'll bring this up at another meeting for those in the future that listen to this. We're going to get into an explanation on some of these extensions for profiling, but I'm going to stop the recording.